I'm Sandra Smith, Executive Director of the Asia Pacific region, and we are joined here today with Erica Navarrete, ED of Europe and Emerging Market Regions. I'd like to thank everyone here today, especially the Asian Bankers Association, for your support and for joining our webinar today. To give a brief update just on ATMIA, ATMIA has over 25 years experience serving the ATM industry. Over this time, we have seen many changes, the technologies we use, strong growth in the industry, and new security challenges. Through all this change, ATMIA has been there to support the ATM industry, adapting the industry as new opportunity and challenges appear. We have seen some extraordinary events in the last 25 years, including a GFC and a global pandemic. And through all this, the resilience of the ATM industry has never been in doubt. I will be sharing more of an insight to ATMIA and the ATM Security Association later in this webinar. Moving forward with today's presentation, I'd like to introduce Erica Navarrete. Erica is the Executive Director for the Europe and Emerging Markets. She plays a pivotal role in overseeing the growth in these regions in membership and conference activities. Erica has a solid background in events management, marketing, and business development. Today's presentation is a global perspective in cash and ATMs. Thank you, Erica.
Good afternoon, good morning, good evening, depending on where you're all from. I am, as Sandra said, Erica Navarrete from ATMIA, Executive Director for Europe and the Emerging Markets. I work closely with our members across Europe and the emerging markets, which comprise of Africa, Middle East, India, and Pakistan. ATMIA is committed to helping our members keep abreast of industry news and developments about the ATM industry, improving the operational efficiencies, understand and influence regulatory processes, participate in the local, regional, and global ATM community, and help to forge new relationships through our comprehensive programs and services. We have also launched an advocacy council to advocate for members on key issues facing the industry. Our fund supports advocacy and legal work for members and advocates on behalf of the ATM. My presentation today will focus on the following areas: future of cash cycle, ATMIA member update, the decreasing number of ATMs, and the future of ATMs in banking. Predicting the exact details of the cash cycle over the next 7 to 10 years is challenging due to the dynamic nature of economic and the technological changes. However, there are some potential trends and developments that may shape the cash cycle during that time frame. It's clear that there is a continued decline in cash usage, and the trend of reduced cash usage is likely to continue. With the increasing adoption of digital payment methods, such as mobile wallets, contactless cards, and cryptocurrency, more transactions will occur electronically. Some of the potential trends and developments that may shape the cash cycle during that time frame include the rise of central bank digital currencies, or CBDCs. Several countries are exploring or developing their own CBDCs. In the next 7 to 10 years, we may see the widespread introduction of CBDCs, which could transform the way people store and use money. Number 2, enhanced payment technologies. The cash cycle might be influenced by advancements in payment technologies, innovation like instant payments, real-time settlement systems, and blockchain-based solutions could streamline transactions and reduce the need for cash. Number 3, increased financial inclusion. Efforts to promote financial inclusion may lead to more people gaining access to formal financial services, which could affect how cash moves through various economic strata. Number 4, stricter regulation and reporting. Governments and financial institutions may implement tighter regulations to combat money laundering, tax evasion, and other financial crimes. This could impact cash circulation and usage. Number 5, security and privacy concerns. As digital payments become more prevalent, concerns about cybersecurity and data privacy may arise. The cash cycle may evolve to address these issues and ensure secure and private transactions. Number 6, cross-border payment improvements. The cash cycle in international trade might improve with the implementation of faster and more efficient cross-border payment systems. Number 7, potential challenges. Some challenges could emerge, such as the digital divide, where certain demographics or regions might struggle to adopt cashless methods. Additionally, ensuring resilience against cyber threats and technological failures will be crucial. It's essential to remember that these are speculative trends, and unforeseen events or disruptive technologies could significantly impact the cash cycle in the coming years. The evolution of the cash cycle will depend on a multitude of economic, technological, and regulatory factors. So banks have been pooling ATMs from their branches in France, Belgium, and Luxembourg, while Netherlands are visibly expanding their ATM networks. East estimates that the number of ATMs per 10,000 people ranges anywhere from 2.2 to 12.8. As non-cash payments increase and cash payments decline, the number of ATMs is also decreasing. This decrease in ATMs is significant because it indicates a shift away from cash payments and towards digital payments. In the Eurozone, ATMs peaked at roughly 320,000 in 2014. However, as cash in circulation continues to go up, the future of cash and the future of ATMs becomes aligned. Cash is essential for financial inclusion and resilience. Cash demand remains high, but the question still remains that with the closing of ATMs, what infrastructure can be used? Municipalities are paying for ATMs in certain European cities, realizing the need to promote access to cash for citizens. Consumer groups are also lobbying for more access to cash. There is currently a consumer-driven campaign in Belgium to get consumers involved in promoting cash usage, and in the UK, the campaign to keep cash alive is growing. We are seeing increasing fragmentation of people's payment method. We have added that no organization has the adequate resources to lobby government and policymakers to promote access to cash, but it is important work with grassroots movements, such as the ones taking place in Belgium. Currently in Spain, the cash industry depends on interest rates. Spanish banks face a tough task, forcing many banks to undercut each other to lure clients in an overcrowded market while trying to cut costs. Cash withdrawal fees are at the latest front, pitting banks against each other as large lenders announce increased ATM charges for competitors' customers. Rural areas in Spain, it seems, are reluctant to go digital, making cash an important universal service. Access to cash in the UK is a key element of payment choice and a fundamental consumer necessity for a significant section of the society. The majority of cash withdrawals, it seems, are coming from supermarkets. But the cost of cash on top of the base rate has gone up, leaving IADs, or independent ATM deployers, providing a significant number of ATMs in the UK. A recent Bank of England report noted that 90% of cash comes out of the ATMs. Consumers are still going to supermarkets to take out cash with the closing of bank branches in the country. At the heart of the issue are our consumers, especially the less affluent ones who are most likely to use cash. Charities such as Age UK have raised their concerns with policymakers encouraging a strong service to provide access to cash in the country. The Financial Markets Bill, currently going through the Parliament in UK, does not appear to go far enough to address cash access issues at both a national and local level. The availability of ATMs peaked at 470,000 units scattered across the US in 2019, with a fall off since then to 462,000 in 2020 and an estimated 456,000 last year, according to the research firm Euromonitor International. The automated tellers are disappearing in tandem with banks closing local branches. The banking strategy pivot comes as the digital banking and payment alternatives become more widespread. Between 2015 and 2019, ATMs kept popping up across the US, rising 8% from 434,000 to 470,000 machines during that period, according to Euromonitor. ATMIA announced last month the results of a recent completed project to estimate the current population of ATMs in the US. After a significant dip in 2020, the US ATM growth grew by about 21,000 terminals from 2021 to the end of 2022. ATMI now estimates the total number of active ATMs to be between 520,000 and 540,000. ATMIA's previous population estimate of 475,000 to 500,000 was released in late 2017. The recent low of 450,000 ATMs was experienced in 2020, but many of those ATMs were behind locked doors and out of service due to pandemic shutdowns. The amount of cash held by individuals as a store of value has also grown. And although the number of cash withdrawals has declined slightly, consumers are withdrawing much more per ATM transaction than a few years ago. All of this portends well, particularly for IADs, or independent ATM deployers. As banks continue to close branches in rural, sparsely populated and low-income areas, IADs gain more and more opportunities to provide financial services to the consumer and small business markets. We are also seeing steady growth in the deployment of recycling ATMs in retail locations. Cash remains the most used payment option across Africa and the Middle East and Latin America, with the rate of decline in its use seen during the pandemic leveling off. Africa has not only kept up with it, but in the instances even taking the lead in reshaping its fast-growing electronic payments landscape. And we are seeing a surge of fresh investments and changes in regulations which are actively shaping the digital payment landscape across the continent. While physical currency still holds significant sway in Africa, a survey conducted by McKinsey indicates that the dominance is likely to face challenges in the upcoming years due to the growing momentum of e-payment adoption. ATMs in India. In India, all bank ATMs are interconnected and operate under National Financial Switch ATM network of National Payments Corporation of India, or NPCI. The number of ATMs under the National Financial Switch Network amounted to over 266,000 as of June 2023. The NFS is India's largest network of ATMs, with nearly 1,200 affiliate members and over 300 million transactions. In 2022, there were over 249,000 automatic teller machines, or ATMs, across India. This was an increase compared to around 200,000 ATMs in 2019. Typical locations of ATMs are inside or outside of bank branches, inside shopping malls, or at railway stations and airports. Whilst more than 50% of banking transactions in India are conducted via ATMs, there are continuing challenges in India and elsewhere in the Asia-Pacific region, which include guaranteeing reliable access to grid power to run ATMs and handle high transaction volumes. ATMs usage worldwide. So today, more than half of the world's ATMs are found in just 5 countries: China, the United States, Japan, Brazil, and India. Of these, the first 4 experienced a decline in numbers during 2018, while the 5th, India, saw a marked slowing of ATM growth, according to the Global ATM Market and Forecast to 2024, a new report from the London-based research and consulting firm RBR. Each market had its own reasons for the reduction in ATM numbers, so RBR found. So in China, the swift adoption of non-cash payments has contributed to the rapid fall of ATM installations. In the US, bank branches closures have meant fewer bank ATMs. In Japan, the ATM market shrank for the first time since 2009 as banks attempted to improve operational efficiency through increased ATM sharing. In Brazil, the removal of around 1,200 terminals in 2018 was primarily due to banks reacting to a surge in the use of digital channels. Given the current pattern of ATM removals and installations, RBR reported that the global ATM total is set to fall slowly to 3.22 million in 2024. That is roughly the same number of ATMs as in 2015, when the installed base stood at 3.2 million. In 2016, RBR forecast that the installed base would reach 4 million by 2021. It is worth noting, however, that in the UAE, the number of ATMs operated by banks increased to 5,279 by the end of the first quarter of 2019, compared to 5,274 in the same period in 2018, according to the data from the Central Bank of the UAE. Financial inclusion initiates continue to bolster ATM growth in developing market across Asia Pacific, the Middle East, and Africa and Latin America, RBR said. Both traditional financial institutions and non-bank entities are engaged in pioneering efforts to streamline both local and international payments, aiming to provide much-needed novel solutions to individuals and businesses. As a result, the domestic e-payment section in Africa is anticipated to experience an annual revenue growth of around 20%. This trajectory is projected to lead to a market worth approximately 40 billion by the year 2025, according to McKinsey. The future of ATMs in banking. So after more than 50 years since its adoption, ATM remains a core banking touchpoint with the consumer. What was first introduced as just a convenient cash withdrawal unit has now become the second most important self-service channel after mobile and online banking. For example, US-based Cardtronics, which operates 280,000 ATMs across 10 countries, reports that in June 2020, the total amount of cash withdrawn has increased by approximately 10% compared to June 2019. You'll take note as well that this was during the an increasing amount of banking institutions are starting to look at ATM as an important data source, which enables them to track consumer data and elevate the consumer experience. Modern ATMs can collect elaborate data on unit usage, including withdrawal frequency and amounts. This, in turn, allows the banks to forecast ATM cash demand. Although such initiatives have been on the bank's agenda for a few years now, the increasing accessibility of machine learning algorithms enables much more precise forecasting and less burdensome implementation. For example, SAS Forecast Server is an automatic forecasting tool that is capable of predicting future demand based on historical data. So the company has collaborated with DBS Bank in Singapore, which has a network of 1,100 ATMs. Since the software adoption, the bank has seen a yearly 350,000 decrease in the number of customers impacted by ATM replenishment. With the proliferation of innovative technologies like computer vision, ATM capabilities can expand even further while enhancing security. Computer vision enabled ATMs could serve as another security layer, which can confirm the new customer identity without the need to be physically present in the branch. With the increasing amounts of data that financial institutions are now able to collect, data analytics and AI are the only tools that can turn this data into actionable insights, enabling banks to tap into customer-centered approaches. Essentially, every ATM interaction is the opportunity for a bank to engage with the customer in a meaningful way. So we've noticed a lot of interest from our members for dealing with AI applications in the finance and banking sectors. New applications for artificial intelligence often seem to develop by transferring an existing use case in a related field. Includes reducing the number of times an ATM runs out of cash by allowing for more regularly scheduled maintenances. And number three, computer vision applications for ATM security will probably become more commonplace in the next 2 to 5 years. AI applications for ATMs seem to be spread among both AI vendors offering predictive analytics and ATM manufacturers. So it is clear that overall, decreasing ATM availability and limiting financial inclusion can have wide-ranging negative effects on individuals, businesses, and the communities. It's important for policymakers and financial institutions to consider these risks when making decisions about access to banking services. There is a definite need for a holistic approach that considers accessibility, security, financial inclusion, and economic implications. ATMs serve as critical access points for cash, especially in areas with limited banking infrastructure, and reduced ATM availability could exclude underserved populations from basic financial services. Many economies will still heavily rely on cash transactions. So declining ATM numbers could disrupt the functioning of these economies in regions where cash transactions remain prevalent. Therefore, collaboration between banks, regulators, and technology providers to address these risks effectively is of paramount importance. So in summary, the financial services sector is currently experiencing a dynamic phase of innovation and progress. Transformations are in progress that hold the potential to revolutionize the industry. Emerging regulations and guidelines are fostering increased competition and options for consumers, while advancements in technology are introducing fresh approaches and models for financial institutions. In the midst of an evolving landscape, it is of increasing importance for the industry to remain mindful of those who may be at risk of exclusion from financial services, particularly individuals residing in remote areas and low-income regions. In the future, we will see a payments industry defined by diversity and choice. Cash will coexist with cards, online transactions, mobile, and whatever exciting technologies might be around the corner. This expansion of choice is already a reality, but it will become even more important as economies all over the world seek the best route to find universal financial inclusion. Thank you for your time today and your attention. If you have any further questions, Sandra will have her presentation, and then we will receive questions at the end of the webinar.
Thank you so much, Erica, for sharing this important and insightful presentation on a global perspective on ATMs and cash. I believe the key message here today is that industry stakeholders joining the ATM Industry Association and the ATM Security Association will mean that you're part of a network of over 10,000 industry stakeholders around the world, and everyone benefits from this collective knowledge. So now moving to the next section of our webinar, where we'll focus on ATM, the ATM Security Association, and the advantages of being a member. So what's been happening in ATMIA? In 2022, ATMIA welcomed a new CEO, Lonnie Talbot. Lonnie took over from Mike Lee, who led ATMIA for over 20 years. Lonnie brings a wealth of experience working for Fortune 500 companies and has led the team to hold 2 successful US events in 23 and 24, where we had over 1,000 industry experts attending these events and has been well received. Also in 2022, ATMIA acquired the ATM Security Association. This association offers its members a trove of information, including various white papers and reports. One of the many services that ASA provides is access to the Crisis and Crime Management Intelligence System. This is also known as the CCMIS. This is the first global crime intelligence database for the ATM industry, and it is a centralized, searchable database of ATM incidences that helps the industry stakeholders understand global crime trends, methods, and emerging forms of attacks. It's through this global intelligent database that we can analyze and, more importantly, break down specific global information. We can see with this heat map that the majority of attacks has occurred in the US and India. The CCMIS has the ability to break down further with crime intelligent database, showing that crime varies from region for region. For example, in the US, Texas is very different from California. In Europe, activity in Germany is much greater than that of other regions. And for the Asian region, most reports mainly come from India and a few from Sri Lanka. But as depicted in that pie chart on the right side, these incidences can break down the various forms of crime, and this showing that cash trapping is presently the #1. This is an example of an incident report where the user reports the incident and allows the user to delve deeper into what's happening, such as the technique and the trend style, and where these incidences have occurred. Filters can be used to search for specific type of attacks, methods, and define the countries or group of countries. The CCMIS will give the user a full detailed report of the incident down to the amount that has been taken out of the ATM. Please keep in mind that these incident reports only contain the information provided by the contributor, so some of these reports will be more complete than others. As of the end of December, the CCMIS, industry's first global scale ATM crime database, has over 24,000 incident reports. These are mainly coming from the US, India, Germany, South Africa, UK and Canada. So in terms of what is the emerging protection for companies and banks, to achieve a successful outcome with adequate protection for your machines in the designated countries, the ASA needs relevant data from a specific country to target the specific needs. For example, in India, most attacks are fraud, so the ATM Security Association works with companies and banks on security measures that focuses on the protection of ATMs and networks from criminal access. It's important that we work together as an industry to provide accurate insight into criminal activity on a global scale. The whole industry will benefit from this data that can be used to monitor the criminal activity in specific regions. The ATM Security Association can provide current information on the various tactics and countermeasures, such as GPS tracking, ink staining, skimmer detection, sufficient lighting, AI, and bollards, and would certainly welcome the opportunity to share further details on these specific areas with our members at a later date. What are the plans for APMIA in 2024? For this region, Asia Pacific and Southeast Asia, we will continue our advocacy work against the call by some to move towards a cashless society. APMIA will continue to facilitate industry dialogue through our many platforms. For Asia Pacific, we hold quarterly strategic direction forums where members have the opportunity to submit any topics they would like to discuss openly with only members on this teleconference. As one of the positive outcomes from today's webinar, APMIA is keen to expand our presence in Southeast Asia and India. We are presently working with global sponsors with representatives in these countries to secure a strong industry position for the industry in 2024 and beyond. APMIA would like to take this opportunity to set up a similar in Southeast Asia to discuss any topics or issues that would assist you to grow and remain relevant in this challenging and changing environment. We're happy to discuss this after the webinar, so feel free to reach out to me anytime. In terms of globally, we will continue to look for meaningful industry partnerships with associations who share the same view on payment choice and cash inclusion. APMIA will be updating our website with new and improved graphics, with simpler navigation and easy to use, along with a rolling out of a new email platform that will give the opportunity for members to text one another. Had quite numerous questions. We'll just tackle a couple of them. So I'll direct this one to my colleague Erica. We've been asked, how can APMIA promote financial inclusion through its members?
There's quite a few ways that ATMIA can promote financial inclusion through its members. So number one would be deploying ATMs in underserved areas. So we should encourage its members to deploy ATMs in underserved or remote areas where traditional banking infrastructure is lacking, and can improve access to financial services for individuals who are unbanked or underbanked. 2, offering surcharge-free ATMs, encouraging member ATM operators to offer surcharge-free ATMs for certain transactions or to specific demographics such as low-income communities, can reduce financial barriers to accessing cash and other banking services. Supporting cash access initiatives, so collaborating with governments, financial institutions, and non-profit organizations to support initiatives that ensure continued access to cash, especially in areas where digital banking infrastructure is not well developed. Advocating for regulatory policies. Advocating for regulatory policies that support the deployment of ATMs in underserved areas, streamline the process of setting up the ATMs, and ensure fair access to banking services for all individuals can help promote financial inclusion. Promoting financial literacy, so collaborating with member organizations to develop and distribute educational resources on financial literacy can empower the individuals to make informed decisions about managing their finances and utilizing banking services effectively. And then lastly, data collection and analysis. So collecting data on ATM usage patterns and demographics served by member ATMs can help identify areas with limited access to financial services and inform targeted efforts to promote inclusion. I think those 6 reasons would be best for ATMIA to promote any financial inclusion, Sandra.
Fabulous. Thank you so much, Erica. That concludes today's webinar.